Welcome back. Shares of auto parts maker Martinrea are moving higher this morning following the company's stronger than expected results. The company had a profit rise of 6.4% and higher sales as well. The company also sees an improving outlook with better results expected in the second half of this year as supply chain related disruptions ease. Joining us to talk more about the results is Rob Wildeboer, Executive Chairman and co-founder of Martinrea. Rob, good to touch base with you again. Your company is getting some praise from analysts today for its execution in a market that continues to be difficult, but the market is improving. Talk to us about the macro environment that your company is functioning in. You've been pretty candid earlier this year about the supply chain headaches that have made life difficult at your end.
Well, it's always good to be blunt because then you can fall back on what you said and try and look at the world as it really is. So the reality of our market, the automotive market, it's almost a tale of two cities. The OEMs have done quite well in the shortage of parts and chips, and the dealers have done pretty well, but the auto parts suppliers have kind of been proverbial ham in the sandwich, getting squeezed from both ends in terms of higher costs and lower production and a few things like that. The companies that have dealt with it, which includes ourselves and some other resilient auto parts suppliers, are actually seeing improving times as we go forward. There's a huge demand for vehicles. There's a paucity of supply. And what we're seeing is increased production over the next several years. We think that we're coming out of it, and it's going to be a very good time for those auto parts suppliers that have really created operational efficiency and used this time to strengthen themselves. And so, we effectively performed as we said we were going to perform. It's still a tough market out there, but we see it's getting better, not worse.
Now, in terms of your company's execution, I said you were getting some praise from analysts. A couple of analysts, Brian Morrison at TD and Krista Friesen at CIBC, both point to your company's ability to negotiate effectively with OEMs. Those are car makers. And I think the issue at play here is your ability to pass on inflationary pressures that you're feeling into the pricing that you get from the people who buy your parts.
Yeah, I think there's a number of things that go into rising profits and EPS and so forth, and which will continue to do it. And at the heart of our business is a great operational team led by some great people and our wonderful people in the plants that are executing. But the reality is that we're living in a different world than a lot of people have seen for a very long time. In 2020. When the market went down, it came back very robustly, and people said, okay, it's back to normal. It wasn't. And then when the chips came, some people said it was going to be a blip. It's turned out to basically last a long time, and there have been a lot of supply chain pressures brought on by the lockdowns and the pandemic and so forth. And what's happened is it's taken time for a lot of people to react to that, including suppliers, which essentially say, look, we're all in business together. We have to earn a profit. You have to earn a profit too. Our suppliers have to earn a profit. But in the context of this market, we have to ensure that effectively the efficiencies in the supply chain are met, and that we have to have the discussions on, for example, dealing with higher labor costs, higher supply costs, and so forth. And so it's been a negotiation, and ultimately, the supply base is if you're in business, you got to get paid, and you have to have those discussions. So it's not like there are threats or anything like that. It's just a recognition that we're in a time frame where we have to adjust to a bunch of different cost pressures. The benefit for our industry is people need vehicles, and they're going to buy them. And the other benefit is North America is particularly strong. U.S. economy is strong, and when you have demand, everyone's trying to increase production to meet that demand because it's good for everybody.
Can that strong economic environment last? I mean, as you know, there's a great debate among investors and watchers of the U.S. economy that recession is a significant risk.
It's interesting. Like, everyone's negative. We live in a broken world, and there's lots of challenges, but we've always had challenges, including in this industry, 9/11, 2008, and so forth, and we tend to come back. So there's two aspects. One is for the auto parts supplier. If production goes up next year, as everybody is saying it will, even in a recession, that's good for the auto parts supplier, because our revenues are going to go up, and as supply chain issues ease, that's actually good for us, even if there is a recession as defined as 2 quarters with negative growth or whatever. I believe that the U.S. economy is fundamentally fairly robust. You look at housing, for example. There's still a demand for housing. The balance sheets of Americans are actually better than Canadians by a significant amount. And as long as we don't screw it up by over work on interest rates, raising them too high, too fast, or et cetera, we'll adjust. And I think most people are figuring that interest rates will go up, but the inflationary pressures are easing. And also recognize that as we look at inflation from here to 12 months ago, we're up a lot. The real issue is what's going to happen 12 months from now. And most people, and what we're seeing as well, is you won't have the same levels of inflation. So don't go too crazy on interest rates and we'll be fine.
What about Europe? Your company has less exposure than some of the big players to sales in Europe, but they still, according to what I'm reading, account for about 23% of sales. Yep. I'm also seeing that you've spoken to your customers in Europe where there are heightened worries about a recession and also the possibility of rationing of natural gas.
Yeah. I mean, it's interesting. We have 57 plants in 10 countries in a number of continents. And so geopolitics is something that we actually look at every morning, especially when dealing with a Russian-Ukraine situation and potentially gas shortages in Europe and so forth. I think it's certainly a possibility in the context of gas rationing. I know that we and our customers are all in the same boat as far as that goes, and so are countries to try and deal with those issues. I do think that I'm actually of the view that we'll see some pressures in the fall. We never assume the best. I think we'll see some pressures as we work through the Russia gas thing and how much gas actually makes it through the pipeline and so forth. But eventually these things are going to resolve themselves because I think Europe's got to find other sources of energy, and they're figuring that out. That maybe it's not so good to close the nuclear power plants in Germany, and maybe it's good to really press to get some liquid natural gas come from other countries, which hopefully includes Canada at some point.